Hello, welcome back to Closing Bell on, I've lost track of the date, on the 8th of July 2021. I'm excited today because the VIX starting to wake up. VIX shot up as high as 19. Remember a couple of days ago, perhaps last week, the VIX was sitting nicely at 15 and then boom, suddenly about 20-30% rise. So what's happening is causing a bit of a panic, and if you look at the news, there's not much real news, concrete evidence of what is going on, but let me explain to you. So today I'm going to give you 5 key points to watch out for the month of July and what to look forward to, because at the end of the day, as long-term investors like us who invest in good quality companies, we just have to look forward and play our cards properly, not to panic. So the first one, all I want to say is the VIX may be selling off next week. There are a lot of option traders who are calling to hedge their portfolio. They're actually trying to short the market on a triple leverage. So it's been seen on CNBC and it's been seen on Yahoo Finance, and people are preparing to take this bet. What is the reason? No real reason. Okay, it's all about profit taking, Profit taking on key stocks like the semiconductors, the Apple, the Amazon, they all go roaring up all-time high. And remember, the earnings is just around the corner. So taking profits at time is pretty healthy. So I would suggest, as long-term investors, there's no way I would be able to time. There's no way I'll be shorting the market just now. So I'm going to sit back and relax and calm and see what happens. In fact, if you were swing trading, if you had a swing trade account, like myself personally, I was swing trading, I was already taking profit last week. Last week I've taken profit, I've taken likes of AMD, Nvidia, so now I'm sitting cash on my swing trade account, around about 25-30% cash. So I'm just waiting again for the VIX to spike up to as high as 24, 25, 26 before I start buying anything, buying good bargains. And the second thing that I want to share is, remember, the earnings is not far away. Netflix earning as of today is 12 days away. I always use Netflix as the first starting kickoff point because Netflix gives a lot of information when they release the earnings, especially subscriber growth, are people still sitting at home, are people going outside, and how much growth to be seen on streaming, because it's all about technology and return back to work. So Netflix is a good indication. All I want to say is not just Netflix, but the likes of Apple, Amazon, all the big mega cap FANG stocks will be on display. But one thing I just want to warn everyone, do not expect big, huge fireworks, another record breaking. Remember, Q2 is one of the quieter times for these mega cap stocks. Q2 is basically an alignment of the stars to show that they are on target. They are on target for the sales, for the revenue growth. The real big mega concert earnings will be the Q3, Q4 and then Q1. So this one is going to be slightly dampened. If you hear any news or any drop in drastic figure that they missed by 1 or 2%, don't over panic. Take it as an opportunity to buy. So for me, I'm going to be monitoring all these mega cap stocks. I'm quite excited about it. But if I do see any missed figures and stuff, then it tells me what's going to happen. But do not panic. And perhaps I think this might be an opportunity to buy if any of these big cap stocks have missed. And this might be the last time in this year to pick up great quality stocks before they fly. And point number 3, which I may have already shared a bit, is this may be the last opportunity to buy good quality stocks. Because at the end of the day, the index, the S&P 500, the FTSE, the Dow Jones are doing really, really well. Some of them are going about 20-25% yield already halfway through the year. Some of these big cap FANG stocks are still lagging behind 10%. So my prediction is, my expectation with Q3, Q4, they should surpass this index funds. They should surpass this index performance benchmark. So I'm talking about another 10-15% potential growth on the likes of Adobe, AVGO, Nvidia, Google, Apple, Facebook, Microsoft, the list goes on. So this might be number 3. Point number 3 might be an opportunity for you to pick up if you see any missed figures, if Microsoft missed something, if Netflix missed something, if Broadcom missed something. Pick up some. Give a bit of diversification in your portfolio, and that's the way to go. So do not panic. Take this as an opportunity to buy if it gets ugly in the month of July. Point number 4, I want to point out again and again, we had this rotation story, we had all this nonsense about oil and all that stuff. Ignore the noise, close the noise, focus on growth, okay? Whatever you do as a long-term investor, as a family investor, as a young investor, as a going to retirement, buying new dividends, focus on the growth stocks. It doesn't matter if you want to go and get Shell or BP, and those stocks will only perhaps most likely on recovery 2x. But the likes of the Netflix, the likes of the Facebook, the likes of the Nvidia, the likes of the Tesla, those stocks have room to run for the next decade. Those stocks are focusing on changing the technology regime for the next decade, and how we stream, and how we surf, and how we travel. These are the focus that we should be putting our money in, we should be investing. So keep your focus on the growth stocks. It's good to buy some of this JP Morgan, Morgan Stanley. It's nice to have some staple along for your diversification. But this primary main focus will be still growth, because that's what is going to pay you real dividend at the end in the next couple of years' time. And finally, point number 5, nothing too drastic in today's news. It's just really do nothing. There's nothing much you can do. There's do nothing. Just enjoy the roller coaster, enjoy the ride. I mean, look at the past few months. I mean, if you try to swing, try to buy in the low and buy the high, how much gain would you have made? If you left your portfolio aside and just let it run and do nothing, you most likely be on a better gain than try to swing and work so hard. Remember Pareto's rule, 20-80, 20% effort, 80% outcome. If you want to put additional 80%, but remember, you're not only going to get the additional 20% output for all that hard work. Remember, we are all not traders, we're not professional, we're just here to speculate the market, to buy good quality stocks, look at quality, look at company, follow the earnings on a quarterly basis, buy, own long term, and that's it. Okay, so that's my point number 5. Keep it easy, just do nothing. So thank you very much for today. Hopefully tomorrow I will come back with some buy triggers, because some of these stocks may be looking attractive. I'll use my Fibonacci retracement tool. So I appreciate if anybody want to leave any comment below on good quality stocks. I didn't want to hear any of this hype spec, all these meme stocks. I just want good quality stocks. But a couple already come to my head, like Apple, Microsoft, Facebook. I want to give quick 5 buy trigger for tomorrow. So stay tuned for tomorrow. Don't miss it. I'm here. I'm strong. I wish I got a louder voice, but I'm trying my very best. So thank you very much. I hope you like and subscribe to help me grow my channel, and hope to see you soon.
I hope you enjoyed that video. If you want to see future videos, please subscribe to the channel and press the bell button. Ding dong! More videos. Bye!